Hello, hello, hello. Welcome to another ES Futures trading stream. Today is Tuesday, September 17th. It is 10:22 a.m. Eastern Time in the US. Uh, I hope you have something on this, but we have a gap here. Let's call it this gap high. Yesterday this we have really nice balance here. Yesterday we have a inside day, overlapping value, overlapping to lower value. Very questionable day yesterday. You know, um, but being long here or short yesterday was one of the last things I wanted to be. I didn't do anything yesterday. It was a really bad day. I still consider that everybody's waiting for FOMC tomorrow. But this high was super questionable. Now I'm checking the December contract, right? We have frantic buying here, traders buying this day, and failing to extend the market to have upside extension. Same thing happened yesterday, but doing so, it weakens this high here. And we have today, and last night, so I was checking. I went to bed kind of late last night. It was unbelievable what we have yesterday here. Now, look at these highs here. Look at these highs. 1, 2, 3, 4, 5, 6, 7, 8 highs here. This just being short here is the last thing you want to be. The odds were not favored. Now let me check. I haven't put my saddle here yet. 56 and 57, very mechanical saddle as well. That's one, and where's last? 94.75. The most important thing is the gap today. We have a gap, and really a nice trade here when the market just dries here, and you have something here. Come on. Now we had something here. Can you see this single prints here and single prints down here? This happens time after time. Okay, this is a stop. This is my stop here. Closing this, very mechanical. Okay, very mechanical stop, but it is what the market is doing. Right? If the market doesn't have enough, if the market is going to close the gap, usually the gap is closed right away. Usually the selling comes right from the opening. It didn't happen. Now we have now almost 200k the volume in futures. Overall volume is a little bit higher, slightly higher. Let's check how much volume September has. $83. So kind of like a 83 plus 160, that's 200. Yeah, a decent volume we have here. But this one is drying actually. Got to be very careful here. Very careful, my friends. No. Notice how this, we have an all-time high now. Okay, this is look at these highs here. 1, 2, 3, 4, 5, 6 highs. Really, and this is something I was thinking that can happen here. Alright, if you check your charts, all these highs are have been left behind, right? For really far in these charts, new all-time highs, really a little bit higher than this. But when we check these charts, it's really not that much, right? It's really not that much. And if we check September, we actually can see that this gap, I don't have it here, right? But this gap has not been closed yet. This gap has not been closed, and the all-time high is still there. There is still a lot of interest in this contract, I believe. This was my support resistance area, right here where the market gap, a ton, really a ton of block activity. This block activity that we have here happened just before the market break. That happened right here, right? In this day or a couple days before, and that's why I have this as a support resistance. Notice where this is here, right? Market has memory. All what we have to do is not my bad. Something that we have to do is not all, but something we have to do is to remember what happened, where and when it happened, right? Because if the market struggle around certain areas, usually it will struggle again. Okay, when it come back, if the market speed up in certain areas going one way, outside it will speed up again when the time to go in the opposite direction comes. I am very hesitant now. Notice what happened now. We have this area here, right? We have this area here with volume. Let's see the market can force its way up here. Notice where this market is being bought here. Being bought from overnight high. just from the high, it has just closed the distributions. Yeah? I hope you can see the mechanical way how this market is trading. It doesn't mean that I am going to go against it, right? As a matter of fact, I am seeing if I can keep it here. Now the fact that the market has closed this thing is a sign also. That tells us something as well. This market is getting too low, man. Really. Look at the X's here, only 2 ticks. Just enough. Just enough single prints to be called X's. Alright. The city market can come down here. Before it. We have a day to the upside here. Just be careful here. Can you see where the market is being bought? Be held back, right? No. Yes, for days like today, to be honest, we have one trade to the outside. The main thing for me is try to recognize, trying to assess what kind of day we have today. All right, we have seen traders buying the market from this area here, then from B held back, then from daily held back. And what else do we have? Yeah? Very mechanical. There's nothing here. The next thing in the downside, we held back, he held back, and of course the gap, right? One by one, they are being removed. Removed here, removed from um, A high, removed from B high, removed from daily hardback. Now, type of traders that buy from here are different. Also, notice how this dries here. Now, there is not, for me, from my point of view, okay, there is not such a strong buying here, but you know, there's no selling. Okay, there's no sellers here right now. That can change. I am not trying to sell. Huh? Why you want to sell a market that is going higher? Why you want to sell a market that has not closed a gap? Why you want to sell a market that is one time framing higher? Right? Why? Right now it's trending higher. Why you wanna, why you wanna swim against the currents? Don't do that. This 830 high that I have here is from September contract. This contract here, this Z4, is this is December. Okay. The December contract has market, as I said, market is already making new highs. This is the scenario that is developing. The scenario that is developing is the one that we were talking yesterday. And I got just, that's why it's very important to do your homework as well, no? The possibilities that can have, what can happen as well. So you don't have biases, but not just, try to develop not just one, right? At least two, I would do three. Right? So you don't have it. The odds were against the short, right? The odds that yesterday's high were was going to stay there were very low. Right? Why you want to do that? Okay, let's keep watching this. Remember, tomorrow we have FOMC. Now, there is something that happened here. I still remember. I hope you remember this day here. This was super, super good. I haven't seen, if you replay this day, I haven't seen a short squeeze like this. No, this was short covering, no short squeeze, right? I haven't seen that, in a while. I don't remember actually when was the last time I have seen a short covering day like the one we had yesterday. When from Jim, it is very nice having somebody like Jim, that can give you some information, right? Days like that day, like this was Wednesday. Days like that happen when bigger time frame participants get cut short. It happens to us all the time. At you know, it can happen to anybody. To everybody can fall for that too. Now, what I'm going to rename this as gap closed. You have another gap here, another gap to the upside. Nice, huh? This is something I don't like. No, that's not. Just pay it. This reference is relevant for today only. All right. This low very close to halfback. This very mechanical buying. Very mechanical buying. Something that I was thinking also. I was thinking, oh boy, this is value lower. Can we have maybe another day try when the market tries to push lower here, right? And and down comes FOMC, and just we have a gigantic spike here to the upside. One of those spikes, right, that take these highs out, make a new high, right? Makes new highs, new all-time highs, and from them the market develops. And the thing here is the curious thing here is we got the rollover contract here. Just a second, please. I have to answer some. All right, I got it. You know, I don't know what I was talking about. Oh, and check this out, man. I know, don't short a trending day. One thing, don't short a trending day. Two, right? Don't short and make a market that's making new all-time highs. This is just something very hard to grasp for so many people. Because that's a strategy actually that big hedge funds or big traders use, right? What's that? Buy new highs, buy new all-time highs. And just don't do that. If you insist in shorting a market that is trending higher, you know, odds are that you are going to have maybe a better opportunity, very late during the day, because all this inventory also needs some rebalancing, right? They are going to be, this can get long as well, and Sooner or later we'll need some rebalancing, and the later it is, maybe before the close, you can have some opportunity. But try to short the market while it's trending higher. That's just, you know, it has to be out of your book. You have to write that off of your trading book, just because it will hurt. It will hurt so many times before you can have anything good out of it. What I am thinking now, no, yesterday we have this thought, right, about these highs, the possibility that the scenario that we had where one contract is making new highs while the other is still very low, right? And now, boy, I forgot what I was trying to elaborate here. But I have something here. Oh, this is the thing. We have FMC tomorrow. And a lot of hedging happens. A lot of hedging happens before these significant events here. You got to hedge. You got to hedge to the upside or to the downside as well. The movement, the rebalancing of these portfolios usually happens a couple days before the event, before the news release, which is going to be tomorrow. And the day previous usually is a thin day, right? Thin day. Thin days have the tendency or can be moved, or can be extended, stretched out quite big distances, quite long distances sometimes. I have observed that in the past, this year I have observed that happening a lot. Market is stretching out. Boy, and that happens also because there's just trading going on here. Most of the money that is involved, most of the participants that are involved. Look at this, man. This is just crazy. No, look at this. Look at this profile here. You got volume here. Takes this volume out. Or it fails, and then come back and adds another one on top of that. Look at this. This is very got to be very careful here. All right? If you got a loan because the market is to the side, just don't let the market go too much away from your position. How much time do we have? 10 more minutes. Volume is coming. A little bit volume. Traders are very excited here. If you have any question, please just let me know. Now I think regarding the current trade, okay, regarding, um, I guess I'm going to do something here, just like yesterday. I'm going to put this one here to monitor what's happening now. Notice what's happening notice what's happening to volume here. I will have slightly higher volume here, slightly higher. This is like, could be like 2% coming here, and you know, right now we have like 5 more minutes. Can it make it? Oh, what I was going to say, come on, man, I'm getting old here. I started doing one thing and then completely forgot I was what is that OCD? Come on, man. Is that obesity? Oh, okay, because I started doing something and then completely forgot what I was going to do. What I was going to do, what I'm doing here is I am, this is September, and this is the market, the rollover one. We have 260K. Now it is gaining volume, but the thing is, it's not that much, man. It's not that much. It really is not. I would expect this one to be maybe double that this, but I think this is all because FOMC tomorrow. I guess we will have significant volume. We may have some really violent swings because check this out. You know, this is very long here. There's a lot of inventory that's long here. The contract is expiring soon. There's a lot of, just imagine what can happen here. All the long inventory. There's a good amount of traders also that love to sell naked options, man. Selling naked puts is here is just so tempting, easy money. I remember when I started in this business, there was a mentor, why was supposed to be a teacher, that used to teach selling options, naked puts or naked calls as a easy money, easy money. You can sell this option, for example, down here, this 54 here, selling puts, naked puts here. The only thing the market needs to do is to close above this level, for example, for you to keep your premium. Now check how much the premium is for these ones. It's not that much. 50, 100 $100, something like that. Sometimes 20, 10, something, and they sell like 10, 20 options at a time. Easy money. It's a very tempting strategy because you win a lot. You win lots of time. The market's coming back here to check this low. Let's see if it has success. Now, I was talking about this strategy, and But and these people, these traders, win lots of times, but wins their wins are hundreds, 200s, stuff like that. But the day they lose, right? The day will lose one time. They don't. The market just need to be against you only once in your trading career, and you know, all that you have made in years, right? It can be years doing that. It will come after you and will take all that you have won before, and then take more and more and more and more and more. Because what happens is the same thing that happened here to the shorts here, right? And it happens, man. It happens so fast that you don't have time. You just don't have time. This market can break, for example. Just to give you an example, I would sell this puts here, the 5400 puts. I expiring Friday. How much are those? No fucking idea how much are those. But they must be cheap. Oh, look at that. You know, this low has been taken. The C low has been taken. There's a lot of rotation here for a market that's making new highs. Now we have value. Market still trading high. You know, and if, for example, if this market starts to break here, if it tries to close the gap, these ones, let's assume that there were 20 bucks, right? Fair option, right? It will be 20 down here, maybe 20, 21, 25 comes down here. But once you start to gain speed, those ones will go against you, man. It will really, really easy. Will be 1, 2, 3, 4, 5 points against you in just, it can be seconds. Then you start to think, okay, I was having like 1 2 points now. Nice, right? For me, I'm going to collect that money. Let's check if this lowest can be taken. And suddenly you are underwater. Oh boy, and then you start to pray. That's when you start to pray. Oh, okay, the only thing I need is the market just not to close it, but it keeps going lower and lower, and it just keeps, you keep going underwater, deeper and deeper and deeper, all right? And then panic sets, right? And then everybody starts to cover because they are deep underwater. There can be dozens, but there can be thousands underwater. They close. As soon as they close, the market goes in the opposite direction. It's just how it is, man. This is and traders know that. Meaning big traders know that. Traders know when the market is too low. We can see the market's getting too low, for example. Right? You can see the market's getting too low. We know when the market is getting too short. Now, what I see here is trade is buying dips now. Right? There's still a market to the upside. Look at, oh, come on, man. Look at this formation, my God. Look at, oh. Now I'm going to show you something here. Look at what happened here, right? There's a lot of pressure to the upside. Pressure, 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 pressure. It just fails. And then comes back all the way down to here, right? It came down to here. It took this high, it took half back, this half back, this half back, and then this half back was down here. It took that one too. And then let's go higher again. This type of formations are short-term trading. Now all of this that was here, this was here, the movement that we have to the downside, this kind of bears are very frightening. Oh boy, this market is going back to zero now. It's going back to 5,000, right? And traders are forced to liquidate here. It requires another type of traders, another type of money buying here. Right? It is just curious. This is and the reason why I have two charts here, why I have September. I have September and December here. Is I can see these things, right? Notice where the all-time high from this chart is, right? This is way up here, right? It's not with 721. It's, I did something. This is 29. It is down there, right there. Selling from that. This is the overnight high, right? And that's why I transfer my levels from this chart to this one. It is not, to know, oh, okay, I'm going to be a seller from this. That's not the reason. What I'm trying to do is I'm trying to get in sync with the market. I cannot get in sync with the market if I don't understand what the market's doing. Right? And all this reference that I put in my charts, I for that. The only reason I do that is to have something to see what I try to see what traders are watching. If I see, for example, the market is trading from these references, then I got a pretty good idea that it's just short-term trading. And notice also, where's the gap? The market started to chew into the gap and then was liquidated. Inventory is liquidated. Just from that. My question here is, who would like to face an event like FOMC tomorrow? Long or short? Right? In this case, long. Too long, man. The risk is just too high. And I think Nasdaq is trading from the 50s. Is it? No, it has been left behind. Check this out, man. This is really interesting here. This is really interesting here. This is the current contract. Alright? Making new highs here. This is charts that everybody see. And this is the current contract. This is the current content. Granted, you have no volume here. There's no volume here, but there's a gap here on the upper side. This is the adjusted content. So many things. And the thing is, which one you watch, which one you choose, which one you follow, which one you use to trade. Come on, that's another reason why this week is very hard, right? It can be very misleading here. And I just choose, right, not to be part of this. You can be killed just so many times, man. Everybody's talking about rate cuts. Everybody knows tomorrow we have a rate cut. Now, finally, the Fed is going to cut rates. The market is going to rally to 10,000. Everybody's happy that Fed's cutting rates. But if the Fed cut rates, it has another meaning also in the long term, right? It's being forced to cut. Unemployment may be rising. And we have the employment number the next day. We have that just Thursday. Right, the weekly. The market is following those numbers closely now. Oh yeah. Any question you have, please just let me know. Now we have something here. We have an inside bar, man. Inside bar here. What is the trend? Trends to the upside, right? What is the trade? Trades to the upside. We have an inside bar. Go with the breakout of the inside bar, preferably with the direction of the trend. One of the things that help you just have to read. Now, one of the things that I also discovered when this is what happens to everybody in the trading journey is the media, right? Because we are so desperate to have a win. We are so desperate to be successful, right? To recover our losses, to make it in this business, and we just start to follow somebody. It doesn't work. We start to watch webinars, start to read books, do this, do that, right? Hopping from one system to another. Stick to one. And the thing is, nobody can teach you how to trade. It's really hard. That part is really hard to understand. And if you look out there you will find some very expensive courses, right? 3,000, 4,000, 7,000, 10,000, you know, courses that will make you a good trader. Guaranteed. You know, if I can do that, if I can, just listen to this, if I can create, design a system, a teaching a course or a methodology that will make you a successful trader, guarantee for 10,000 bucks, or for any amount. That means that I can make that for myself. And if I can make for myself, I can make way, 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 much way, much more money than that. Which is better, 10,000 or 100,000? Right? Which one? So it's not. Trading cannot be taught. What what can be taught is what to watch. What I can watch, what's happening here, what what things are out there in the market that can have some value, right? Some meaningful value. And this is something that I got, Jim says the same thing. Tom Hugard says the same thing. Mark Douglas. I was confusing Mark Douglas with Michael, with the actor. Also say that in his books is each one in its own way, right? With their own words, right? The market you trade is yourself. Now, I can understand what the market is doing, but what do I do now? That's the question. What do I do now? The market is breaking. What do I do now? That's okay. That's the trade right there. It is all up to you, right? And that's a factor that so many people don't account for, right? Yourself. That's the thing. Why I cannot keep my wings? Why I keep adding to my losses? Why I don't cut my losses short? Why I don't take the trade? Why I take profits so soon? And that is just something that is the few people just see. It is the system, the way to trade successfully will come from deep inside you. You won't find, if you look for it outside, you won't find that anywhere. It comes from yourself, from the realization that all the faults, all the losses that you have had in the past are just because of you. It's not because of the market. It's not because the market has gone against me. It's because me. It's because I haven't closed my position, because I haven't put a stop, because I haven't respected my plan, because I have added to my losses. It is just because of me. All of this happening here is just because of yourself. It's not because of the market. Nobody knows what the market is going to do or what's going to happen. That's also another reason why it's so detrimental from my point of view, right? To have daily goals, right? How much you daily goal? I had to make 200 or 500 or 1,000 or whatever. How do you know that? Man, if you know that, if you know how much you are going to make, that's so, you got it there. You got it. And the thing is, I don't know. I don't know that. The only thing that I can control, the only thing I can control is how much I can lose. That's the only thing I have. How much risk I am willing to take. That's the only thing I can have control. Nothing else. What I am going to do right now, we have like 5 minutes before this period ends. It is a nice inside bar. Look at that, man. Look, did you see that movement? You know how quick these movements are? It just comes, it was up here, and it just came down, boom, 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 boom. And this is very risky, Trading this market, being in this market is quite risky right now. Just got to be very careful here. What I'm going to do, I'm kind of a little bit hungry here. I'm going to make something to eat. I can't leave this up there if it's of use to any of you. Alright? Okay, brothers. See you soon. Okay, okay. About 2 minutes before this period ends. All right. Period is the next period is out here. Can that low hold? This low hold. Trades are buying dips here. Can you see? Really close, as close as possible to this low. It's going to fall. If this one falls, then we have this. That's the monitor. Huh? This low is very questionable here. I mean, right now, do you want to be long or short right at the center of the profile? Think about that. Huh? Think about that. You are not below value, not above value. You are right at the center. Where most of the trade happens is right at the center. Now, if we have something here that has upside, this is an inside bar, remember. This is an inside bar. Oh boy, this bar, I'm checking the bars. Bar chart. It closed right at when it opens, right? So traders are really confused here. You don't have because traders love to see red, whites, right? I mean red greens, or black and white or whatever. And you have known that here. It opened right there, man. It opened right there. Maybe let's check the volume here. Now, this is very mechanical, very systematic trading. Okay. Decreases volume. It doesn't have anything. Can you see that? It opened right when it closed right when it opened. This is I mean, this is something I wouldn't take, but you have a stop here. The market takes is super risky. This long is not good now. Why I would like to, most part of the time you will hear me saying something like, why I would take this trade, man? Come on, Victor. What the heck? The risk is just too high here. The odds of trades are going to work are lower. It's true. The market is trending higher. It's true. The market is going higher. It's true. The trade is to the upside. I would like to be short in the trading market. But just the risk is just not worth. You got to ride that. This is it. Okay? This is it. You got here. How many ticks you are risking here? You are risking only one tick here. Or 2 ticks because my chart's adding 2 ticks here. 21, 50, 21. That's it. This is when traders risk $50. This is it. You have $50 here. Right there. Right there. Right there. Your stop is here or maybe 1 tick below this. And that's it. But look at where the high is coming from. Exactly half back. Let me see. But this is something I don't like. Can you see how volume is coming here? Volume is increasing in the lower side. They're pushing here. Traders are pushing this market to the downside. If this push fails, we may come close to this high. And that D low is taken, it can be kind of like a quick, like a spike there to the downside, like boom, to the downside, and then it recovers. Nasdaq has already taken that low, D low. Remember where E high is, huh? Why the halfback? Oh man, look at that. No, I don't like this. Alright guys, I will see you. I hope you have unless there's any questions, I will call it a day. And wish you a wonderful rest of the day, a wonderful trading day. Stay safe. See you tomorrow. Bye bye.